The final thing we want to talk about the elements of accounting is the concept of an asset versus an expense. This can be very confusing. They can often look really, really similar. So what are we talking about? We're saying, well, there's 5 elements of the accounting reports. In the balance sheet, there's assets, liabilities, and owner's equities. So that's 3 elements. And in the income statement, there's revenues and expenses. So the issue here is at some point you're going to get a transaction in the future, and you've either got to you're going to say, is that an asset or an expense? And it's going to be a big decision because it's either going to go on the balance sheet or the income statement. So how are you going to tell the difference? Well, you'll just learn most things. You'll go, oh, I know that's an expense or I know that's an asset, but why don't we get a bit smarter than that and go, well, look, the rule for an asset versus an expense is it's all to do with the economic resources or benefits. What are we saying? We're saying, well, things that you buy or pay for or use have an economic resource or benefit, okay? And it's all about, well, have you consumed or used that benefit already, okay? Or have you not consumed that benefit already? So basically, if you look at it like that, it actually gets really simple, and you can say, if there's something has an economic resource, and I have used that resource, I've consumed it, that is an expense. So all that means is the economic resources or benefits have been consumed. Now, if they have not been consumed, I buy something but I haven't used it yet, that is actually an asset, and that just means the economic resources or benefits have not been consumed. So that's what we're going to say. The rule is this: if I've consumed the economic benefits of something or used them, that is an expense. If I have not yet used the economic resources or consumed them from something, that is an asset. And it's all about when were these economic benefits used. So we could say an expense is simply economic benefits that we've consumed this period, whereas an asset is the economic benefits we'll consume in future periods. So look at this. Why don't we take a real simple example, one that we're not going to get in our course, but why don't we just say you drive a taxi and you put $50 of petrol in your car at the start of today. First of all, is the petrol an economic resource? Is the business going to be able to benefit from something? Is it going to provide a benefit to the business? We're going to say, yeah, absolutely. It provides the benefit that you can drive your taxi to make fares. So why don't we look at that as kind of like a big tank here and just say, yeah, we've got $50 of petrol, and that is an economic resource or benefit because we can now drive our taxi today. So at the start of the day, we put the fuel in the taxi, okay? We haven't driven it yet. So what we'll say is, let's look at the petrol as an economic resource. Have we consumed or used that? And if we have, it'll be an expense. Or have we not yet consumed the petrol, in which case it's an asset. Now, we haven't driven the car yet, so we would say, I haven't used any of that petrol, so I don't have an expense yet. I actually have $50 of an asset called petrol. So what we should probably say is, instead of calling this petrol, we should say that's an unused economic resource, which is an asset. Why don't we just sort of say, look, by the end of the day, you drove around, you picked up some customers, you have used up $20 of that petrol making fares. So you hadn't used 50, now you've used 20. So we just want to look at it the same way. How much of the economic resources or benefits have we consumed? That'll be your expense. And what have we still not yet consumed? What will we use in the future? That'll be your asset. Well, we've used $20 of petrol making fares, so that is actually our expense. But there's still $30 of petrol in this tank. So, and we're going to use those economic benefits in the future. So we actually have an asset that's $30. So this is wrong. So what happens is, as we use the economic benefits, we say we use $20 of petrol here, but we've got $30 unused. And we don't really use the words used and unused. What we say is this is an expense, the bit that we've used, and the bit that is still unused is an asset. And that's a really simple example, but to apply the concept to a business, which is a little trickier, it's actually not that different. So let's take an example that you're going to have to deal with at some point this year. On the 1st of January, a business paid $15,000 to cover its rent for January, February, and March. So here's the timeline. Here's today. We paid $5,000 for each month effectively. If we paid $15,000 for 3 months, okay, we paid $5,000. Now that's going to provide an economic benefit in January. We paid another $5,000. That's going to be an economic benefit in February. And we paid another $5,000 here. That's going to provide an economic benefit in March. The question now is, though, what is the rent expense at the end of January? And it all comes down to usage. So if we drew a little sort of line in the sand here and said, well, what's the expense? And all we ever need to ask is what's been used. In this case, we've used that rent. That's gone. But this bit is not used or unused. So in the future, we're going to get an economic benefit, but we haven't used it yet. So that basically means that this bit's an expense, gone, consumed, used up. But in the future, I will be able to use the rent here and the rent here. So I've got an asset of $10,000 for the future. And a good way to think about this is to use the taxi and the petrol. Why don't you think of assets as big tanks of economic resources or benefits? So looking at the example we just did, the minute I paid that rent all in one go for 3 months, I got a big tank of economic resources. Okay, and at the beginning, so let's say the actual day I paid them, I hadn't used any of them. So that just means all the economic benefits are assets. And then as a month goes by to January, as they're consumed up, they become expenses. So let's say at the end of January here, draw a line, that's gone, used up. So now I've used up $5,000, that's an expense, but I've still got $10,000 of economic benefits that are unused. Another month goes by, that becomes used. March is unused, so we've got an expense here of 10,000 and an asset here of 5,000. And then eventually, by the end of March, we'll have used up all the economic benefits and they're all gone. The tank is now empty. So even though it's not quite literally a petrol tank, that's not a bad way of thinking of an asset. It's just a big tank of economic resources. And as we use those economic resources, it becomes an expense.